Hello and welcome to Business Incorporated. I'm Chimeze Obi Iwago. Coming up on the show, Nigeria's GDP sees a steep contraction of minus 6.10% year-on-year in the second quarter of 2020. Tunisia's incoming Prime Minister plans restructuring of economic ministries. And Fitch Ratings says Ghana's slow fiscal consolidation may add to rating strains. We'll begin the show with Nigeria's gross domestic product, which recorded its first negative growth after the 2016 recession at minus 6.10% year-on-year from the 1.87% in the first quarter of this year. According to the data released by the National Bureau of Statistics today, the contraction reflects an end to a three-year trend of low but positive real growth rates recorded since the end of the 2016-2017 recession due to the significantly lower level of domestic and international economic activities as a result of the lockdown measures enforced to curb the spread of the COVID-19 pandemic. Real growth for the oil sector was minus 6.63% year-on-year in the second quarter of 2020, indicating a decrease of minus 13.80% relative to the rate recorded in the corresponding quarter of 2019. The non-oil sector declined by minus 6.05% in real terms, the first decline in real non-oil GDP growth since third quarter of 2017. Non-oil sector output was driven by financial and insurance, information and communication, agriculture, and public administration, moderating the economy-wide decline. On the other hand, sectors which experienced the highest negative growth included transport and storage, accommodation and food services, construction, education, real estate, and trade, among others. All right, let's take a look at intraday markets numbers here in Africa, which were all in the green, with South Africa's JSE index jumping almost 2%, while the NSE here in Nigeria was up marginally by 0.03%. Elsewhere in the region, Egypt's EGX30 rose 0.38%. Kenya closed positive on Friday. And major stock markets in the Middle East were also positive at intraday. In the UAE, Dubai's main index surged 2.03%, with blue-chip developer Emma Properties rising 0.24%, while the Abu Dhabi index rose 0.59%, helped by a 0.2% increase in the country's largest lender, First Abu Dhabi Bank. In Qatar, the index added 0.83%, as Industries Qatar surged 6.5%, while Saudi Arabia's index was higher by 0.49%. And in Europe, stocks were in the positive territory this morning as investors weighed the latest financial, geopolitical, and coronavirus news worldwide. We have Chelsea Dulany on board now to talk to us. Hello, Chelsea. Good afternoon. Good to see you again. Well, it's a big moment for the German DAX as its newest member, the food delivery company Delivery Hero, makes its debut. How is the stock trading on its first day?
It's been a pretty good start to the entrance to the DAX for Delivery Hero. The stock is up about 2% today. It's already risen more than 110% over the past year. So it's really been on a tear, and it continues to be quite strong. For Delivery Hero, this is a big moment. The company is not very old. It's only been around for a couple of years. And so it is growing very fast, especially through the pandemic. They have really seen sales and orders surge as more people are getting food delivery and not eating out. And also for Germany, this is quite an important moment. Delivery Hero is replacing Wirecard, which is the very embattled tech company, financial tech firm that's gone bankrupt because of a huge accounting scandal. But for Delivery Hero, they are a tech company in Germany, and right now the DAX basically is filled with a lot of older, more traditional manufacturing, industrial, chemical firms. And Germany is quite concerned about the fact that it's really fallen behind in terms of digitalization and the digital economy. They don't have a lot of big tech giants like Apple or Amazon. So the CEO was telling us at DW earlier today in an interview that he sees this as really a promising sign for the future of European tech, and that's how investors seem to be taking it so far today as well.
And the number of new businesses founded in Germany fell by almost 10% in the first half of the year. Of course, that's due to the coronavirus pandemic. But will there be long-term consequences for the German economy?
It certainly suggests that there could be some damage to the startup scene in Germany. So this sort of goes hand in hand with Delivery Hero, where Germany really wants to cultivate this base of tech startups, of small homegrown companies that are very big in the digital economy. And those businesses have been really decimated by the pandemic. As you mentioned, we saw the number of new businesses fall by about 10%, but the number of new businesses fell by over 20%. So this has been particularly difficult for smaller companies, and it seems like it will continue to stay difficult for those companies, given how many questions there are about the path for the global economy and for a recovery. And so that could certainly wipe out a portion of this tech startup scene that the country has been trying to build over the past several years.
And Germany hosted a series of concerts over the weekend to study how coronavirus spreads at large events. How did this study work and what are the implications?
So this study was run by a university in Leipzig, which is about an hour outside of Berlin. They wanted to see how the virus would spread in a situation where you have a lot of people gathered for an event. So here in Germany, we have started to see public life restart, but the idea of starting concerts again or even bigger events, sporting events, festivals, that all remains very much in question because there just isn't a lot of clarity over how the disease or how the virus would spread throughout that. So what these researchers did was invite about 2,000 people to come to these concerts. All of the people were younger, they weren't high risk, and they were tested. They had their temperature taken as they came into the concert, and they sprayed them with a fluorescent disinfectant. So they were able to track how that fluorescent disinfectant really traveled throughout the course of the concert. We don't have results from this yet. They're expected to release the results later in the year. But obviously, it's very important for a lot of industries to have big events again. And this is one piece of data that could help foster the restart of large events in Germany.
We'll sure want to have the results of that data, and perhaps we'll discuss that on this program whenever it's released. Enjoy the rest of the day, Chelsea. In the UK, the day opened positive for investors on the FTSE 100 with the index up 1.9%. Well, let's see how much of that has changed and, of course, other market news. Let's talk to Juliana. Hello, Juliana. Good afternoon. Well, how is the stock market holding up the positive sentiment seen in the morning? You spoke about Mike Ashley's phrases buying into retailer DW Sports out of administration for £37 million in the morning. How are the markets responding?
Good afternoon, Chimese. Well, there are triple-digit gains on the FTSE this afternoon, adding on that positive sentiment from early trade. The all-share is up 1.69%. The FTSE 100 is up by 1.95%. And the FTSE 250 is up by 0.79%. In currencies, the pound is also up against the US dollar by 0.19%. Down, though, against the euro by 0.08% and up against the Japanese yen by 0.14%. Yes, as you said, this morning it was announced that the Fraser Group, run by billionaire Mike Ashley, had bought the assets of DW Group, which is a gym company. They went into administration earlier this month, putting 1,700 jobs at risk. Now it's been announced that 922 jobs will be saved by the DW Group and this merger with the Fraser Group, which is fantastic for those who would have been losing their jobs. But I've got to say, it seems as if all market traders are looking towards America. Their coronavirus cases, their daily cases have decreased by 17.2% week on week. I believe there are about 39,000 new infections reported yesterday. This is just in time for the Republican convention, which kicks off later tonight. So a lot of people are going to be anticipating some pretty outrageous comments from President Donald Trump. So all eyes will be focused on that when that kicks off later tonight.
Absolutely. Everybody will want to hear him speak. Anyway, BT was the biggest riser on the FTSE 100 this morning after reports at the weekend said that it has hired advisors to fend off potential takeover attempts. Tell us more about that.
Well, it's an interesting story, Chimazine. It was first reported by Sky News over the weekend. BT, the telecoms giant, they've been in trouble really this year. Their shares have tumbled by over 50%, and that's because they've been facing increased competition from the telecoms industry, no less than from Huawei, who, of course, last month were banned from building any part of Britain's 5G network. Now, BT are going to play a really instrumental part in rolling out 5G and also rolling out broadband to about 20 million homes. This is going to cost about £12 billion. But ever since they were banned or they stopped paying out the dividend, shareholders haven't been happy. And at the close of market on Friday afternoon, the telecoms giant was valued at about £10 billion. And it was off the back of that there was a lot of speculation that they could be taken over in a hostile bid. I believe that one of the telecoms giants that could be taken over them were Deutsche Telekom. Now, they haven't actually put out any statement, and there is no idea on whether or not this story is to be true. But because of that, the board at BT, they said that they're willing to fight off any hostile takeover, and they have hired Goldman Sachs to do so. That appeared to have cheered their investors, and their shares rose by about 8%. Now, there have been some concerns saying that the £10 billion market valuation that they were given is completely false and completely undervalued. And because it is undervalued, there are some beliefs that, there are some rivals that may think that they can come in and take them over at a cost of about £16 billion. It's worth mentioning that Hela Bilal, she's a very senior investment research analyst. She said that no bidders have been identified, but any potential bidder may be attracted by the fact that the individual businesses such as Openreach are valued far higher than the sum of the parts of the £10 billion, with potential bidders coming from the private equity industry. Deutsche Telekom is seen as a likely candidate given its 12% stake in BT following the deal several years ago for the EE mobile network. So like I said, BT's major shareholders have now got Goldman Sachs involved to try and revamp their defence strategy because they by no way, shape or form want a hostile takeover, particularly as they're playing such a crucial role in building Britain's 5G network. So there'll be lots of government poke-nosing if a deal was to take place.
And in another corporate news, Tesco is permanently hiring about 16,000 extra staff taken on during the pandemic to help support a surge in online grocery trade. Can we now say it's not all doom and gloom for the retail sector?
Well, it's certainly not all doom and gloom for food retail. Of course, they've seen a complete surge in their sales, especially at the beginning of the pandemic here in Britain in March, just before Prime Minister Boris Johnson told the country to lock down. We were seeing lots of people flooding into supermarkets to stock up on their essential items. We spoke about John Lewis this morning, Chimaze, didn't we? And last year, their online sales were 40%. This year, they're expected to rise to about 60 to 70%. Before the pandemic, I believe 600,000 sales per week were done online by Tesco, which is Britain's biggest supermarket. During the pandemic, that's risen to 1.6 million. So it's completely over doubled. And during the pandemic, they already hired 4,000 staff. They then got on another 16,000 to deal with the surge. And they have just announced that those 16,000 jobs will be permanent. I believe 4,000 of those jobs will be for delivery drivers. 10,000 will be for pickers, those who pick the online groceries. So this is a great news story, really good for the 16,000. But of course, I've got to tell you, the retail sector is not out of the woods yet. Retail and the airline industry have by far received the lion's share when it comes to the brunt of the pandemic. But in the food delivery service, this is great. And of course, 16,000 jobs is great for Boris Johnson's labour market report, which will be out probably next week.
Well, we'll continue to follow those developing stories and we'll continue to talk about them. The week has just started. Enjoy the rest of the day.
Thank you.
We'll take a break now and we'll be back for more. Just stay with us. Tunisia's incoming Prime Minister plans to gather the Ministries of Finance, Investment and State Property into a single department on the plans to revamp government and revive the economy. Hakim Machini, a political independent, is expected to announce his technocrat government's 23 ministers within the next few days. Authorities have been struggling to diffuse constant protests over widespread unemployment, lack of investment for development, and poor health, electricity, and water services. Tunisia's tourism department economy shrank 21.6% in the second quarter of 2020 compared to the same period last year due to the coronavirus crisis. And Fitch Ratings says Ghana's plans to pursue fiscal consolidation more slowly than the government had previously indicated may lead to a higher public debt trajectory and could be a source of downward pressure on the country's ratings. According to Fitch, all the projections need to be seen in the context of upcoming elections. The ratings agency expects a substantial temporary deterioration in the budget balance in 2020, in line with a shock from the coronavirus pandemic. Projections in the budget guidelines suggest that the deficit will remain above the 5% ceiling until 2022, but still record a primary deficit even in 2024 against the frequent requirement of a primary surplus. And Nigeria is the latest country in sub-Saharan Africa to release its second quarter GDP. We will look at it from foreign investment point of view, and also on our radar is the military coup in Mali. What are the hidden dangers for the West African CFA franc? Matt Kiniger, a senior analyst for sub-Saharan Africa at Docker Frontier London, joins us to unpack all of these. Hello, Matt. Good afternoon. Good to see you.
Hello, good afternoon. Thank you for having me on the show.
So are Nigeria's latest GDP figures in line with your expectations, and are there any trends that really stood out for you?
Yes, so the latest data for Q2 were broadly in line with our expectations here at Docker Frontier. So we were forecasting a contraction of about 7% year on year during the second quarter, and this contraction of around about 6.1% that we've seen from the data. So it's a little bit better than we were forecasting, but it's still roughly in line with what we anticipated. So in terms of the trends that really stood out for me, so the logistics and transport sector, very unsurprisingly, performed very badly. I think it had its worst performance since 2017, which really reflects the transport difficulties that companies face as a result of lockdowns and transit restrictions. As expected, the oil sector has performed badly because of low oil prices, and the information, communications, technology, and telecommunications sector has done very well. And this is in line with global trends, as more companies seek to engage their customers via the internet, but also more people are working from home in Nigeria where possible. So that's definitely interesting. In terms of surprises, so we saw that the mining sector continued to do very well. If you exclude the oil sector, mining is looking very upbeat. So it's good news for the extractive industries. But also agriculture has continued to perform very well, and this is very encouraging, and it shows how resilient the sector is in Nigeria, even amidst a pandemic.
Right. Given the severity of the global economic downturn and recent oil price shock, what is your view on the outlook for the Nigerian economy, and when can we expect to see a recovery?
Yes, so it's a really big question on most people's minds when it comes to investment into a country like Nigeria. You know, the downturn has been quite severe, but they want to know when will things get better. So our view is that it's going to be quite a while until the economy starts to grow again. Nigeria is facing one of its biggest external economic shocks that it's faced in almost 30 years. So this is going to force a major fiscal adjustment by the government well into 2021 in our view. So this means that the government will have to cut spending and investment for the next 18 months or so. And so what this means in terms of the GDP growth outlook, so it really does hinge on oil prices and domestic oil production. And also it really does depend on how flexible the Naira will be going forward, whether the central bank will allow the Naira to be a bit more flexible, because this is key in attracting foreign direct investment. But overall, our base case view is that the economy will continue to contract for the rest of 2020, and it will emerge from recession in early 2021. But it won't reach its pre-pandemic size until 2022. So a difficult year ahead, followed by a recovery in 2021.
Now let's talk about the coup in Mali. What does that tell us about the political and security climate in the region, and how much of a risk does it pose to the sustainability of the CFA franc?
Yeah, so this is the other big story that's emerged over the last week or so, last couple of weeks. And so the coup in Mali does certainly reflect the tense political landscape in Mali itself. But more importantly, it reflects the fragility and volatility of the security landscape in Mali and its Sahelian neighbors, such as Niger as well. And so the coup certainly does risk aggravating insecurity across the region, and this does mean that there could be less investor confidence in Mali for the foreseeable future. But it really does depend on how well the new Malian regime works with France and the EU, because these are two bodies that are supporting the fight against extremism in Mali. But until political stability is returned in Mali, our view is that there actually is not a major threat to the CFA franc overall, and this is because France continues to back up or support or underwrite the CFA franc more broadly. Crucially, the French Treasury is still committed to it. Also, Mali's economy, although it is quite significant in the CFA franc area, overall it represents less than the CFA franc, less than 10% of the CFA franc GDP. So the effects of contagion from the coup can be contained and are probably going to be relatively limited.
Now, as we get a clearer sense of the regional fallout from the Mali coup, how directly will businesses be affected in countries that share the CFA franc, such as Senegal and Cote d'Ivoire?
Yeah, so Senegal and Cote d'Ivoire are the two major economies that use the CFA franc, and obviously businesses will be concerned about what the coup will mean to them from a day-to-day perspective. So some businesses may face difficulties getting access to foreign currency if they want to place orders overseas or repatriate their earnings from Cote d'Ivoire and Senegal. And this is because the Central Bank of West African states will probably want to limit an outflow of foreign currency over the next couple of weeks until the dust settles in Mali politically. And also, the francophone markets in West Africa are uniquely deeply integrated by sub-Saharan African standards in terms of trade and commerce. And so we may find that businesses are affected, especially if they have cross-border supply chains. And a very good example is the transit industry, obviously, transport and transit. Also the gold industry. So Mali is now one of Africa's largest gold producers. So companies that produce gold in Mali and export them via Senegal or Cote d'Ivoire could be affected over the next couple of months.
All right, thank you very much for your time, Matt. Matt Kiniger is a senior analyst for Sub-Saharan Africa at Docker Frontier, London. And on that note, we wrap up today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwagu.